Okay, folks, welcome to Swing Trading Today. This is Bob Desmond, and it is Friday. Happy Friday. I want to keep this brief and pretty focused. I will segue over into the pre-market activity, but this morning's focus is going to be on gold and the gold stocks. Many of you are out there saying, my God, what a bloodbath. Why are you even thinking about catching a falling knife? The reason is I see great opportunity where others see an absolute train wreck. And yes, I freely admit, this is a chart of gold, which is an absolute train wreck. Now, why do I like it? Well, as the name of my website would indicate, I'm a contrarian. I like to find value where others see nothing. And the RSI on gold, while not yet at extreme oversold levels, is approaching that level, where we closed out yesterday at 22.55. Now, we did close off the lows of the day to close above the 1180 mark. Let's pull back and take a look at where historical support is on a monthly chart. And you can see here, let's update this chart, that yesterday we hit critical support on gold. It was resistance back here. Let's update this. It was critical resistance back here in November 2009. Then again in December, we inevitably broke through for a big run. We pulled back, retested in June of 13, then again in December 13, and then a number of times after that. So the question is, do we close out the month above this support level? If we do not, well then we're looking at 1130 the ounce on gold. But I think that we'll probably overshoot here. In fact, I think we already did. Yeah, we did. 1167 was the low of the month, and we have recaptured support. It's critical that we hold the 1180 mark, long story short. So going into the day's trade, we need to appreciate the fact that we did see some buying yesterday, despite the fact that we closed down, and we closed above historical support. Now, taking a look at the gold miners, we have an absolute train wreck here. Let's go to the daily chart first. Let's throw some lines up. All right, so on RSI, we are opening up the day at 14.24. I have said, and my friend Rakesh left a comment on my last video, a very nice comment with regard to rounding tops below 20. And I appreciate the comment, Rakesh. Yeah, they are ruthless rebounds off of these extreme oversold levels when you get these rounding tops. Price, we're leaning into for the second consecutive day, the third standard deviation Bollinger Band in red right here. The problem is this. Volume. You have institutions, in my belief, wrongly so, dumping the GDX. Let's go to the NUGT. Same deal here. We have 14.10 on RSI, leaning into the third standard deviation Bollinger Band. The problem? Volume. So these volume bars are creating a problem. And the problem is there's just too much being dumped on the market. We have ripped through this week alone, not just one support level here at the 1731 level, but two. We broke down below and closed below, more importantly, the 1388 level on the NUGT. And here we are today. And on this chart and the monthly charts, we have no historical support below. So we need to go back to the GDX to identify where we have historical support. So here's the GDX daily chart. We know we're oversold on RSI. We know we're oversold on Stokes. And for those of you out there reading Technical Analysis for Dummies, and it gives you a rule of thumb that you buy a stock or an ETF, whatever, when the RSI goes down below 30 or 20, whatever it says. Think about if you had bought, and this is an ETF no less. Think about if you would have bought the GDX back here below 20. That was on or about July the 16th, 17th. Look at this damage that would have been done to your portfolio. We were stopped out of half of our gold mining trade twice during this sell-off. So what's our game plan here? We want to buy more, but what are we looking for? Number one, before I get to the weekly charts, number one, I want to see these volume bars decline. We cannot fight these guys. This is not mom and pop selling 100 shares. This is Fidelity, Goldman, JP Morgan. There's no way you're going to fight these guys. Two, we need to identify where there is historical support. Now, I'll argue that if we close out the week below this support level here, last seen back in December of 16, we are going to make a new weekly low next week. And in all probability, that next support level is going to be seen here at 1671, which was support on this chart anyway, back in November of 14, December of 14, and then it acted as a pivot point in October of 15. Then we burst through it, and it was off to the races back in 15. So what I would be doing today is watching for a counter trend rally. If we manage to sell off intraday down to 1671, would I step in and begin buying more? Sure. And you may be saying, you know what, you're catching a falling knife. Well, not really, and I'll tell you why. This RSI on the GDX at 14.24 is unsustainable. We're leaning into the third standard deviation Bollinger Band. I'll save you the technical jargon. We're not supposed to be here. And I am telling you right now, we are going to see our gargantuan rally very, very soon on the gold mining stocks, and in all probability gold as well. The short side of the gold trade is a very overcrowded trade, so we should expect a short squeeze very soon. Now, what else is the problem for gold? The US dollar. Now, oddly enough, here on the 15th, the dollar closed down. The dollar bull ETF, the UUP, closed flat. But using the Dixie, it closed down on the 15th. Yet, that was the day that gold just fell completely apart. So what we're seeing here is gold sell off when the dollar rallies and doesn't necessarily rally when the dollar sells off. What gives? It tells me that the so-called quote-unquote emerging market crisis wasn't necessarily a crisis. The smart money knew it. Yesterday's rally in the stock market implied that there was very little fear, therefore no appetite for gold. Gold is viewed as a safe haven. And I think if we look back 6 months from now and we look at where we stand in terms of price action on gold and the gold miners, here's the GDX again. This will have looked as if it's a great buying opportunity. The problem is that we are all in the moment here dealing with this sell-off. So the key is preserve your liquidity. There is an opportunity here, and you need to keep in mind that this sell-off is completely unsustainable. And when these volume bars begin to dissipate, you can bet there's going to be a tremendous short squeeze in the GDX, NUGT, gold, etc. Now, do I believe the dollar rally is over? No, I don't. And that causes its own problem. I think that in the short term, a gold rally needs to be sold. We will get a retest of the lows. We'll see at that point in time whether or not those lows hold. If they do hold, does that mean that the dollar is breaking? So our game plan, we'll use the GDX. Our game plan for adding to our position is one of two scenarios, or both perhaps. One, we are waiting for weekly chart. We already went over this chart. We are waiting for this support level here to get hit at 1671. Or two, to the daily chart, we are looking for a sell-off. This type of candlestick closing at the lows of the day, when we saw the rally yesterday morning, I was not excited about it. I was rather disappointed. I would rather see a capitulation sell-off in the morning and then a bullish key reversal. For those of you out there that are new to technical analysis, what is a bullish key reversal? What's this guy talking about? A bullish key reversal is this right here. This is a bullish key reversal. You open down, you stay down in the morning. And then by the end of business, you have reversed and you close at or near, very near the highs of the day. That sets the stage for a rally. It's a signal by the markets that you have support below. You then take your support level, you draw your line as I did back here. You draw your support level. If you break down below that level, you need to stop out of your trade. So that's what we're looking for right now. Let's segue over into the pre-market activity, see what gold is doing, see what the dollar is doing, see what the markets are doing, and then I'll get this out to you. All right, we'll begin with the dollar. The dollar is struggling to hold this support level here. In fact, at current, we are trading down below it. This is a 5 a.m. bar, meaning this bar on a 4-hour chart opened up at 5 a.m. It closes at 9 a.m. If we close down below the support level, that's a problem for the dollar. However, tops are rarely V-shaped, meaning we rarely peak and just drop down. Normally, we pull back, consolidate, then we rally. We attempt to take out the prior high. If we get a lower high and we roll over and break down to new lower lows, well then, that's game on for dollar shorts and gold longs. We don't have that at current. So while, yeah, it's great we're a little bit weak on the dollar this morning, we're down 0.21%. When you take a look at gold, gold is only up 0.2%, so hardly a correlation. And we just dipped down to 0.1%. So in talking about gold, it's great to see that we rallied off of support yesterday. We managed to recapture the 1,180 level. Good stuff. We're consolidating there. Good stuff. The problem is that as we've been speaking, we just went negative on gold, despite the fact that the dollar is down as well. So again, the correlation is one-sided. When the dollar rallies, gold drops. When the dollar is weak, gold doesn't necessarily rally, right? So just be careful. Let's take a look at the S&P futures. They're giving up some gains here. Again, this is a 4-hour chart, so this is a 5 a.m. bar closing at 9 a.m. And we are currently giving up a support level. Let's watch and see whether or not it holds. If we do hold it, meaning we manage to rally back by 9 a.m. Eastern Standard Time and recapture, will break out probably above this upper band of resistance. But as it stands right now, this market's coming under some pressure. Now, the NASDAQ is under pressure as well. While we did bounce yesterday, we've given up some of those gains, and now we're attempting to hold support. RSI making lower highs. It was making lower lows. We're now attempting to hold a support level here on the 4-hour RSI. Let's take a look at yields. We'll leave off with the 10-year Treasury note. All right, so the note is rallying at current. That means that the yield is declining. But what we're seeing here is resistance, right? You're seeing these topping tails on top of these candlesticks. That's a sign of sellers above. So I think that we're at a pivot point in this market. The question we need to ask ourselves is, if the economy's so good, why can't we hold a 3% level on the 10-year Treasury yield? And why is the yield curve, monthly chart, 2s versus 10s, why is the yield curve now at last month's lows and at current flashing a bearish engulfing of July's move? What is going on? The bond market is telling us all is not well with this economy. My takeaway from this chart here, folks, and what the bond market is saying is that we're only one headline away from this market breaking. There are a ton of geopolitical events going on out there. So I would offer that we tread with caution and that we wait for market signals, either breakdowns or breakouts, prior to adding to a long position or a short position, and keep one eye on the exit door when you enter a trade. And for gold watchers and gold mining watchers, watch for a bullish key reversal or us hitting historical support. And do not go chasing the morning rally if we get one on the gold and gold mining shares. In all probability, it will fail. And that's it for today, folks. Everybody have a profitable trading day. I will be sending out best stock charts tomorrow, being Saturday. If you're not currently on our email list, enter your email address anywhere on the website, and you will get best stock charts for the coming week. Subscribe to my YouTube channel. And again, everybody have a profitable trading day. Be well.